Bitcoin has dropped by 18.4% over the weekend, stooping to a 3-month low of $46.5 thousand in another market-wide flash crash. Early data suggests plenty of panic sell-offs and weak hand capitulation over the weekend, and a curious reversal of whale behavior since the dip. Where does that leave BTC and its end-of-year prospects? In Santiment's weekly pro report, we dive deep into Bitcoin's latest social and on-chain data and what it suggests about the current state of the crypto market. During market-wide corrections like this one, we at Santiment like to look for on and off-chain markers of significant investor distress. The crypto market always tries to deliver maximum pain to as many investors, which, while unpleasant, is often a necessary precursor to the sustainable price recovery. In addition, we also like to look for signals of weak hand capitulation or panic sell-offs that might signal oversold and potentially undervalued conditions. Perhaps unsurprisingly, the latest crash seems to have prompted a fair amount of holder anxiety and short-term panic, evident in a number of Bitcoin's on-chain metrics. This is maybe best seen on Bitcoin's network realized profit loss chart, NPL for short, which tracks the total ROI of all daily BTC transactions. Here's how NPL works. For each unit of Bitcoin that moves on the blockchain, we take the price at which it last moved and assume this to be its acquisition price. Once it changes addresses again, we assume this to be its sell price. Because of this, dips in Bitcoin's NPL suggest that the coins currently moving on the blockchain are on average being moved at relative loss, and vice versa. The Saturday crash has triggered one of the year's largest drops in Bitcoin's NPL, suggesting that a significant amount of BTC transferred over the weekend were being moved at a loss compared to the last time they changed addresses. As you can see here, an eerily similar dip in Bitcoin's NPL was recorded during its May correction, which at the time pointed to wholesale capitulation and rising panic among weak hands. For context though, do note that these two NPL dips are in fact the two largest dips in Bitcoin's history due to a combination of its meteoric price rise in 2021 and a large-scale response to both dumps. On the whole, a significant drop in Bitcoin's NPL could be indicative of rising FUD among some BTC holders, making moves in expectation of further downtrend. This seems to be further supported by a 2-month high spike in Bitcoin's exchange flow balance that has occurred over the weekend, suggesting a lot more BTC moving to known exchange wallets that are being withdrawn. The uptick in Bitcoin's exchange flow balance may suggest a rise in short-term sell pressure as holders move their bags to exchanges and look to reduce their exposure. Combined with Bitcoin's historic NPL drop, the metrics paint a scene of network-wide panic and a wholesale drop in confidence in the benchmark coin. And it's not just Bitcoin holders that are feeling the burn. Another pain marker that we like to keep an eye on are any significant spikes in MakerDAO CDP liquidations, pointing to growing woes among DeFi participants. As you can see here below, spikes in WETH and WBTC CDP liquidations have soared over the weekend, coinciding with Ethereum's local price bottom. Overall though, the weekend crash has unearthed more than a few signs of holder distress and short-term panic in Bitcoin's on-chain data and beyond. While clearly painful for many market participants, it should be again noted that these types of pain markers have sometimes been a prerequisite for recovery and could help support a directional change if other fundamentals allow. To that point, the latest downslide has had a major impact on Bitcoin's MVRV ratio, an on-chain metric that attempts to quantify the average profit or loss of all addresses that have acquired BTC within a certain time frame. At the time of writing, Bitcoin's 30-day MVRV ratio sits at 10.5% down, suggesting that the average loss of all addresses that have acquired BTC in the previous month is negative 10.5%. Over the weekend, Bitcoin's short-term MVRV slumped to as low as minus 19.4% before rebounding. Elsewhere, it's also notable that Bitcoin's 365-day MVRV ratio dipped to negative territory over the weekend for the first time since August, suggesting that longer-term BTC holders are now around break-even on their initial investment. This decline happened prior to the Saturday crash, causing us to advise caution going into this weekend. As such, it is certainly worth noting that the combined holdings of these addresses has quickly sprung up since the correction, growing by 40,000 BTC over the past 48 hours. Signs of dip buying among some Bitcoin holders, still early to say, but we'd suggest keeping an eye on this trend in days to come. If you look at the behavior of large Bitcoin addresses over the past 18 months, several accumulation sprees have coincided with periods of price appreciation for Bitcoin, and vice versa. Finally, the weekend correction has had a strong impact on Bitcoin's off-chain indicators as well, based on text data for more than 1,000 crypto-related social media channels. So the average sentiment towards the top coin has quickly turned, shifting from overwhelmingly bullish to slightly bearish over the past 72 hours. Based on several backtests of our social metrics, extremely high sentiment and elevated social chatter has typically not been a friend to Bitcoin or other cryptocurrencies, suggesting market euphoria and irrational confidence in the asset's potential. So with that in mind, the latest drop in Bitcoin-related sentiment could be a sign of growing retail fears, which may provide fertile ground for potential recovery. Still, some caution here is advised though, based on the same social data set. The number of buy the dip mentions has soared into the correction, reaching its highest level since late May. So while the wholesale euphoria may have been briefly stifled, plenty of observers still expect quick bounce back and in fact seem to welcome an opportunity to buy back into the market. In other words, the bearish consensus appears to have not yet been established, leaving room for further downward volatility in order for the market to weed out the remaining hopefuls. Well, that's all for this edition of the Santiment's Weekly Pro Report. Thank you very much for watching, and don't worry, we'll be back again very shortly with more updates on Bitcoin and the crypto market in general. Thanks very much for watching, and goodbye.